Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's today about? It's all about relative strength. That sometimes we make things harder than they have to be. So I look all the time for tells, no doubt about it. And I was on the Essentials room going over what I key off of that day. But just keep in mind a couple of things I want to show you because I'm pretty proud of it. So what am I talking about in here? What I'm talking about is the S&P was up at resistance like you see on the right. But on the left, and I'm going to detach where it's not both symbols. But we can have intervals the same. So not the same symbol, different intervals. So I just want to show you what we're talking about in here. So here's the S&P. And on the right, you see the S&P on the 2-minute chart. You know it got up at resistance. On the left is Google. And it's Google on a 2-minute chart. Now, what do we watch? We're not watching that 50 moving average. We're not watching the 20 moving average. We're really watching the ATR trailing stop, and that's it. So what we're watching in here is if I erase all the drawings and you take out, like I said, moving averages, just look at this. What you're going to see is that when this on the right was rallying to a new high, Google was already breaking the ATR trailing stop right here. So at 208, look at that. Stock's 165.84. At 208, guess what? This was at a new high. This was already breaking. So that's when I posted the short right here. Right in there. Posted the short when it broke right there. Broke that low. So what happened? Well, if you best with the ES, you broke even. The ES stayed in a tight zone. On the other hand, we made $1 in Google. So where do you get out? Well, when it goes down this fast, we just put in market on close and bought it on the close, made our 95 cents, and we're happy. That's pretty cool when the markets do nothing to make 95 cents in a big NASDAQ stock, and that's what we did. Now, if it wasn't the end of the day, what would we do? How would we get out? Well, I'll show you. There's your ATR trailing stop. Usually when it gets too far, like the slope gets too much, where it goes down too fast, like it was about to, we'll then add a 20 moving average. That way, sometimes that gets us out, even if the ATR trailing stop's too far away. As you see, that didn't happen in here. It was just the end of the day where you ran out of time. On the other hand, you had over here where it went down fast, and it still worked. The ATR trailing stop and the 20 worked. That's fine, but sometimes when it's real fast, you want to have some moving average that can react fast to it. So that's why we have the 20 in there. In here, we just did market on close, and it worked out great. So tomorrow, that's all we're going to do tomorrow. We're going to look for stocks that refuse to go up. Now, what am I talking about? Well, you have NVIDIA's earnings after the close. If the markets open up, I wouldn't be surprised to see them revert to unchanged. So then you have the edge that if a stock looks bad on the opening and let's say the NASDAQ's up 40 on the upper right. Let's say the NASDAQ's up another 40. But you have a stock like a Google that's already rolling over, then you betting on NASDAQ going back to unchanged because of NVIDIA, then these will be the first stocks to go down. And that's how we're going to try to play tomorrow. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.